morning, afternoon, wherever you are in the world. Today I have a very exciting show where we'll be talking everything AI stocks with both Chris and Jared from Union Capital Partners. So guys, strap yourselves in and have your notepads ready. Make sure you take down some notes because there's going to be some real value here today. So guys, welcome. Could you first start by just introducing yourselves? That would be great.
Excellent. Thanks for having us. Glad to be here. Jared Johnson, Union Capital Partners. Happy to be on a trading battle again. We were just chatting about it. It's been a while, so I'm happy to be here to discuss some of these hot topics that are hitting the market like a ton of bricks right now.
Yeah, I'm Chris Pulver. Work with Jared at Union Capital and work with Market Traders Institute. I'm trying to think. Last time we were on, I don't think it was a battle, or we were talking about, hey, now we're going to work together, whatever that was. It was like all this was coming together. So it's nice to be back. We're actually sitting just through a wall out here in Utah with a hedge fund. So anyway, super excited to be back, and love what the trading battle is always doing.
Okay, cool. Okay, so obviously recently we've seen a great deal of push recently in the stock market. It doesn't seem like it's ever going to be pulling back at any point. But what are your kind of thoughts on that? And what are your thoughts on how AI is driving that move right now?
I think there's some interesting topics to discuss right now in that space. AI. There's a lot to be said about that, and we'll unravel the conversation as we go. I think there's a lot to AI, but I also think that this is a very typical, very bearish, very oversold market that needed a catalyst, and AI was that thing that got people's minds off of the end of the world, doom and gloom, right? We watched 2022 be a place where there was nowhere safe to put your money. You couldn't put it in bonds, you couldn't put it in crypto, you couldn't put it in stocks or anything else. It was all just getting wiped out, and everybody was feeling the pain. And as we see bear markets over the history of forever, they kind of always go in this fashion, and investor sentiment, market sentiment really gets down in the bottom of the barrel. And we always need something that kind of turns people's attention somewhere. We were just chatting before this, and AI is a big hot topic right now. But if it's not AI, it's 5G, it's crypto, it's cannabis stocks, it's whatever, right? And so we always need something to kind of grab onto. The thing that I think is a little bit different from AI than some of these other hypes that we've been into, maybe one of the most recent big ones was certainly 5G, right? 5G is going to change the world, and we're all thinking, I've got my cell phone, I do more than I need to from it. Like, how is 5G going to change my life, right? But AI is a little bit, I think this is, of these hot topics that's hitting the market, I think it's going to have a little bit more legs than a lot of these other things that have gotten us really excited and kind of come and faded.
And to that point, what's interesting about this is, essentially you take the S&P 500 and you say it's being led by 10 stocks, right? And you take NASDAQ, which is 100, and you say it's led by 7 to 10 stocks. So I think what's interesting about fueling this entire move is so few stocks are leading the charge because it's market cap weighted with things like the SPY and the Qs. But at the same time, these are also some of the most profitable companies in the world. So it almost feels like this is safe technology to invest in because it's companies like Apple and Amazon and Google and Microsoft, right? I mean, these are household names that have been some of the biggest performers over the last 15 years that we've mostly had a bull market, outside of surviving the bottom in 2008 and 9 when we finally bottomed out March, April 2009, and then having just an amazing bull run before the disruption in 2018, 2020 with COVID, stimulus and bazooka heard around the world with everybody through 2021. And then, Jared and I called 2022 kind of the great reality or the great reset, because everything was overvalued. I mean, we had technical indicators expressing that across the board. I mean, tech looked like it should drop, and it did, and then everything followed through with it. I mean, we had a great year last year, thankfully, because of like energy and pro-inflation trades. But for the most part, once you got to June of last year, nothing was safe. Bonds were down, stocks were down, didn't matter what sector you're in, there's nowhere to hide. Forex was a great market, but we had wild swings in Forex with the dollar and the yen crosses. So going back to this with AI, I mean, some of the safest and largest and most profitable companies are really at the forefront of this movement, and they're getting a lot of love. And then you take a company like NVIDIA that just makes semiconductors, and they're just producing chips for all the powering of these computers to fuel AI and basically be a framework for it. So it's interesting. And so we talked about this earlier before we started live. Does this market continue to allow other stocks to catch up and we still have a broad market rally? Or is it the hype has been pumped in and built in and priced in, and maybe a pause, or maybe the Fed comes in? We were just talking about this before we started live with you. Is the Fed really going to come swinging tomorrow with something the market doesn't want to hear? When we're at that time of the season where it's the second half of the years, or maybe some sector rotation and positioning where we have like a slow August and maybe a September effect where historically it's the most bearish market in the year. Or does the market care at all? And maybe it doesn't. Maybe this year is just like the FOMO is real, and the best way to be involved is just to continue to participate and blinders on, trade what you see, and it's probably going to new highs. It wouldn't be a surprise to have new highs on the SPY and the Q this year, and even the Dow. I mean, we are not that far away. I mean, we're within single digits of both of them now after this crazy recovery.
Awesome. So it seems like at the moment, obviously, it's the very exciting kind of phase. AI has come in, and everyone's just looking at kind of the word AI and looking at various industries, and it just seems to be pumping kind of across the board. But is there any sort of specific industry where you think that you're most likely to see the most significant growth? And is there any particular stocks that the guys who are watching could keep an eye on, perhaps?
I think there's a couple of things to kind of keep in mind there, right? NVIDIA kind of made everybody's radar after it had gone up 100% over the course of maybe 3 months, right? So at this point, I think, and I think that this is a market agnostic kind of comment, right? It doesn't matter what you're trading. If something makes a move like that, a super extreme move, in my mind, I don't care if NVIDIA goes up another 100% from where it is right now. It's off the radar for me. I don't care what NVIDIA does at this point. It's moved too much. This is all pure hype trade now at this point, right? And every market's kind of got its thing, but the stock market is really super excellent in getting overhyped and getting people getting too excited about things. And I think there's kind of two sides to that, right? I mean, when we're talking, as Chris was mentioning, some of these big companies, Apple and Microsoft and NVIDIA and some of these other guys, I would feel better having a bond, a corporate bond from Apple than I would from the U.S. government. I think I have a better chance of getting paid back from Apple than I do from Uncle Sam, as we say, right? So these companies are so solid and they're doing so good, and they're so safe, right? These are companies that just are freight trains of growth, and they're just going to keep cruising. I think it's going to be a time to be a little careful of these stocks that have really gone crazy, right? These really AI specific stocks. I think an NVIDIA, for example, was doing the right thing at the right time for the right kind of hype to hit, right? There's always going to be one of those, I mean, Apple was like in a great position to say, here's an iPhone, when we really started to care about smartphones, right? I mean, that's positioning on top of everything else. And NVIDIA was kind of in that same situation. They're doing this thing, and they've been doing this thing, making these chips, but now there's a lot of focus on those chips, right? And what they can do and how it pertains to this AI side of things. So I would say, on the trader side of it, be careful chasing the hype. You have to kind of keep your brain in the game, and you have to stay sane about how you participate in these movements. It doesn't mean it's time to short NVIDIA, and it doesn't mean it's time to jump in and buy it. NVIDIA is a watch stock for me. I'm watching it. I'm looking for something to happen that's interesting. If NVIDIA has a terrible earnings, if they have something that really drives the stock down, it gets back on my radar, and it's something I might want to buy. But as it stands, it's kind of in a gray spot for me.
Yeah, I mean, NVIDIA alone, I mean, it went from $350 billion market cap to over $1 trillion in the last 6 months. That's insane.
Yeah.
I mean, it's to make it like, I think the top 6th most profitable company in the world as far as market cap. I wanted to add to that, one thing that could make some really exciting plays in trading as far as AI is the possibility that AI can produce way more efficiency and productivity around the globe. This can help things like manufacturing. This can help things like transportation. This help things like healthcare and finance. An individual can do 5 to 10 times more. I mean, Jared and I think about like how much more content we could have out there for our firm. Getting out there and doing podcasts and writing papers and getting published. We would love to do that. As humans, it's like there's only so much time in the day from opening bell, closing bell, everything else we got going on. But honestly, if we were to utilize some of those AI tools that are content friendly, we both could be like content machines, right? It's way more in our cards to do that by utilizing some of the tools that are out there. So I think the productivity is big. And what's going to be interesting is, let's say the next 1, 2, 3, 5 years, you have a lot of startups that are in their infancy right now that are going to really capitalize on AI and have a workforce of 100 that are just as efficient of companies that have workforces of thousands. So I think that's where this opportunity might be going, is like, if this AI stuff is for real, then I'm more excited about the small businesses that are starting up and become like the up and coming new tech. And maybe that's a possibility that could be, brand new technology that could be instead of this like over concentration where, it's such massive tech and there's nobody that's going to dethrone Apple or nobody that's going to dethrone Google or Amazon. Maybe true, but in some way, if there's companies that can come along that can put in some type of competitive advantage or give something that, rather than just being absorbed or bought by those larger cap companies, they just exist on their own. So I think that would be the exciting thing, is to have some startups that can be way more efficient, reach a few billion in market cap very quickly. And then, they can possibly pop up and be like an S&P 500 or something that's tradable for us.
So that's interesting. So I've been looking, I'm more kind of on the crypto side for kind of the viewers' information, but I've noticed that stuff within AI that supports particular other narratives. So right now within crypto, you're seeing a big push, or what I think is going to be a very big push soon, in things like liquid staking derivatives and GameFi. Is there other kind of industry areas that you think AI is yet to really kind of fully be integrated, that has probably a lot of wiggle room, shall we say, to see some good growth? Like any areas of the market that you think AI is a very natural fit for, and there's particular kind of companies that are going to kind of be coming in to solve issues in those areas?
Well, I mean, I'm sitting here. I just did an AI chat just to see if I could find some landscapes on where AI fits in. So I wanted to ask you, Peter, I mean, blockchain or Web 3.0, is it still in an infancy where there's still lots to explore with AI and Web 3.0? I mean, let's think, 10 years down the road or 30 years down the road. I mean, AI has to have some type of influence on, if the world is going to get behind climate change, it's probably going to have to happen with technology. We're going to have to innovate something if we're going to have green technology or better renewable energy sources or something like that. So let's say when we have a Paris Climate Accord that's supposed to have like 0 emissions in 2050 and everyone starts doing it in 2045, we better have some pretty good technology to wrap that up in 5 years, because right now it's like we're pumping as much as we can. We're replenishing the strategic petroleum reserves we dumped the last couple of years. But Web 3.0, it's like, I mean, if we're going to have like a socialized internet, I feel like that's still in its infancy, where there's a lot of room for growth in something like blockchain or Web 3.0. In major industries, it's like anything that's environmentally friendly, social, like the ESG stocks that, that was like the greenwashing that happened. And that's kind of been smashed down since COVID, essentially, because everyone's stockpiling their own materials and trying to do their own thing and compete and be, very nationalistic. But I'm thinking big industries like healthcare, maybe better diagnostics, quicker, maybe delivery. So instead of going to the doctor, ER, clinic, waiting for hours and hours and hours, it's like, maybe this is your doctor visit, right? It's over a Zoom call and it's great technology and you've got everything you need at your fingertips. And it's like, that'd be a much more pleasant experience than going to sit in a waiting room. Jared, you would know, you're in the hospital all the time.
Yeah,
you and your family.
We got little kids. We know hospital. But I think it's interesting about that. Remember when crypto was getting big and companies were saying, we're just going to mention blockchain, right? We'll just mention blockchain and our stock's going to go crazy and people will just want to invest in us and so on. And I think blockchain has a lot of growth and a lot of exploring to do. And I think AI is in that same boat, right? When you think about large data sets, right? Like healthcare, financial markets and so on, keep in mind that AI and machine learning have been applied to those things for years, right? So now that there's ChatGPT, that doesn't really change those, right? We don't really know what we're going to be able to do with AI. This is all really early. It's just finally consumers are able to use it and say, hey, I can take a 5-line email and turn it into something super fancy sounding that's, 5 paragraphs, right? And so it's, ChatGPT is this interesting thing. I think the most important thing about it is that it just gets people's awareness, right? And what can we do with this and how do we kind of start gearing ourselves towards it? But all of this technology, I mean, if you talk about AI stocks and then some of these other, the snowflakes and the Palantirs out there that's all these guys have been doing, right? Is machine learning and heavy digesting of data. There's all these kids graduating college with data science degrees. So this isn't anything new, right? That's not really, I don't know where AI fits into that yet. It's already been there. It's already doing that. And so that's where I think it's going to be interesting to see where those growth opportunities really do pop up. I mean, just speaking of content creators, right? I mean, I think AI has potential to really do something to a stock like Adobe, right? People sit and use Adobe products and you use Photoshop and you spend hours and hours editing a picture or hours and hours editing video content.
Yep.
I think AI has the potential to cut that down by 90%, right? And I think that makes those kinds of things to use so much more user-friendly and quick and less, I think something that can have a help in lessening these learning curves, right? I think that's where AI gets interesting. I think on the big tech, it's already being used. And so to what degree they go further, who knows? But I think the consumer to the more complex tech that's already out there, I think that's where some interesting opportunities are going to pop up.
I think it's interesting you bring. I've just been sharing a few with you as we speak because as a content creator, I am already using kind of a number of these different tools. One of which is from Adobe. But I kind of think content creators, we make up such a small kind of portion of what's out there. And as we move towards kind of Web3, I think it's a very interesting kind of maneuver into a more personalized experience. So let's say typically with marketing, we're watching TV, we all go and watch the rugby match or the Super Bowl or whatever everyone watches around the world at the same time. So everyone just gets mass marketed to. But I think there's going to be a huge change with regards to how data is manipulated into giving people a personalized experience to encourage them to do things like, extra sort of spending and things like that. So I think within the marketing space, I'm seeing a very big opportunity for companies that can kind of really come in and change the whole user experience for people. So I think that's where Web3 is going to head. And that's where I see the biggest integration. But I'm also seeing another very interesting thing across crypto where now AI is like the hot keyword or whatever you want to call it. And it's getting people just sort of throwing AI into their product, saying, oh, this is a new AI integrated crypto product that doesn't really need to be. Is there anything like that you can see in kind of the stock world that you think actually this is probably a narrative to be avoided? There's no real requirement for artificial intelligence in this space?
Well, Jared and I have gone back and forth on this. We are currently working with a firm that is trying to put together generative AI models for us so we can make decisions faster. I mean, one thing in finance and one thing in trading is there's data everywhere. It's not just open eye, low close. You have all the fundamentals, all the transcripts from earnings calls, everything that would be out there. Most of it's publicly available. So to take information like that and put some type of AI wrapper on it that can feed us information faster, I think that would be incredible. And so we've been at this for months, and part of us wants to go back and get like all these historical correlations and build like 5 to 10 layers of things that over the course of all these windows, and we want to try to get ahead of where big moves are coming. But it is overwhelming to think like there's just so much information in what we do every single day. I mean, there's thousands of publicly traded companies. If you're finding the needle in the haystack and trying to use AI to do that, it's probably more helpful than doing it by yourself as a human, but I think it's just what is intuitive, what is user friendly, and how can it spit something that is actionable as opposed to just regurgitating information. Does that make sense? Like, I mean, there's a lot of stuff we have to dig, and there's an intuition that we built over the years of being in these markets where we don't just, type in a query, spits out an answer. That's my stock. I mean, there's more to it than that. So I think there's finesse, and there's some polishing that has to go into it, but certainly the ability to take a lot of data and bring it in a very short amount of time and allow us to see things, on a user-friendly dashboard we can see ourselves or train people on how to use it and really deep dive into things. That would make our lives a lot easier. So in finance and trading, that's kind of our next big leg. Is we'd love to have some type of tool like that where we subscribe to so many services, we read so much stuff, and it's all these different providers. Well, what if we just had it all in one place? And we can do that by just sourcing. I
think there's a lot of great tools that can certainly help traders. I think kind of a time, old lesson though is going to be interesting because, as Chris is talking, we're working on tools to kind of make our job easier, right? But at the same time, to kind of go back to your question of where is AI and in some of these places in the market, maybe that it doesn't need to be, right? And I think AI is a really shiny, sparkly object. And I think it's going to be a funny topic looking back at, say, 2023 and saying, hey, NVIDIA went nuts, right? Some of these stocks went crazy. And we might say in our fund, but we had our biggest returns buying oil stocks. That has nothing to do with AI, right? And so it kind of goes back to this concept of you kind of have to keep your eye on the ball in any market, right? You're probably seeing in the crypto market, everybody's really stoked about AI, and crypto's having a pretty good run, right? Crypto's not as much on people's minds as AI, right? The general stock market isn't really on people's minds as much as just AI stuff. And we like to go where people aren't, right? And that's where there's opportunity. Because at the end of the day, AI is cool. All of this stuff is cool. We're here to make money for our investors. We're here to make trades that are profitable, that increase our bottom line, right? And I actually love when these kinds of hypes and these kinds of crazes hit, because it gets everybody really distracted and gets everyone's attention really pointed in one direction. And again, the masses miss the real opportunities, which are other things that are out there that are, quote, boring or not so interesting, right? NVIDIA made this really cool move and it was really awesome, but I might, double my fund in an oil trade, and that's even more awesome, So there's kind of a lot to be said on just where our attention ends up going when these kinds of hypes and crazes start to develop in the market.
That's a very interesting point, and something I try and remind my trading community of all the time, because particularly within crypto, you see these very, very big pumps on like a single day, and time again, people can't help themselves but dive into these, right? The shiny object syndrome, I don't know, whatever you want to call it, but it's just, that's kind of physically how the human mind works. And only after years of trading can you kind of train yourself out of being that kind of impulsive person, because no matter, I think, how experienced you get, it's still kind of like, I don't know, there's something within us that wants to dive into this. And that, I think, is probably one of the biggest problems when it comes to trading and what traders find most difficult, which is why kind of for years I've always thought that a computer should at some point be able to trade better than the average trader. However, there's not really right now any kind of AI tool that at least I know of that can kind of accurately trade on behalf of an investor. Maybe there is. But in the future, how do you kind of think the world of day trading is going to go? Do you think people will still be able to day trade, or is it just going to be like one AI against another AI? How's that kind of going to play out, do you think?
Well, I can say that the last several months for me have felt like there's a saying out there that amateurs open and pros close. And so when you're watching the markets, opening bell to closing bell, you can tell there is a very different feel and vibe and look to the market from 9:30 a.m. Eastern time when opening bell hits versus 2 p.m. So 2 p.m. to 4 p.m., the market is way more efficient, way more volume-esque, way more aggressive price action. And I think a lot of that is driven by quants and algos and not necessarily AI, but I think there's a lot of heavy machine trading at those times because it's just, there's heavy volume flow, there's positioning, there's hedging going on all over the markets. And I see that. And so, Jared, I've talked a lot about that, but the way I've kind of been looking to fine tune my strategy is exercise restraint in the morning and just kind of wait and be willing to trade those final hours where that's when everything's the most efficient. That's when things are priced the best. That's when we have the purest movements. And I think that's a great window for me to focus on. As far as machines trading better than humans, I have forex robots that do a great job for me. That there have been systems I've been running for years that I haven't touched, and they just continue to do their thing. Now they work with open drawdowns and they're scale-in type robots and whatnot, but they trade on very efficient instruments that I like to trade, like currencies. And but for the last 3-4 years, they've run essentially with me never intervening other than just checking my connections and knowing that they work themselves through drawdowns and they make profit. It's consistent every week. And that to me is auto trading. And does it trade better than me? Yeah, it's a 24-hour market. I'm a human. I'd love to get my 6, 7, 8 hours of sleep a night and have some type of work-life balance where, I'm not in a 24-hour market. Peter, you're in crypto. It's like, how's your work-life balance? Are you all over the place all the time? Are you finding a way to have your windows where you can trade and focus and then, make some sense of things? Or is it just constantly like on your phone and alerts and checking levels? And I'm just curious. Our days of forex trading were like that, where it was a 24-hour market, 5.5 days a week, and it's not good for your health.
Yeah, for sure. And obviously with kind of the YouTube and a community of people who are all in different countries constantly, I think you have to be kind of aware that this is very unhealthy for you to constantly have distractions all the time from things and to really be on top of your time. And I think as well, like for traders and inexperienced traders, over trading is probably one of the most dangerous things for new traders to kind of do, where they're forcing trades. I do think that it's good to give yourself a window, whether that's 2 hours, 4 hours. Most people obviously have jobs, and when you can kind of fit those in, obviously it's difficult depending on where you are in the world, but to make a rule, and this should be part of one of your trading rules, that I will only trade between X time and this time, and to not have, I think apps on your phone are pretty dangerous as well with regards to trading. To be honest, I've tried to kind of more get rid of all of these triggers in my life. I've spent a lot of time watching the likes of Andrew Huberman talking about health and the real problems with constant distraction. It's actually very psychologically damaging, I think, and people perhaps don't realize. And trading can be a very painful and stressful experience if you don't manage it properly, which I think people don't necessarily give enough time for. So I think definitely I've learned the hard way through some pretty stressful periods, but crypto again, people need to be very aware that if you missed it, you missed it. You have to just limit your time exposure to it, otherwise you might end up going crazy, particularly with that volatility going on. Okay, so obviously we've kind of looked at main kind of factors across AI and things like that. Now we see the stock market and it's continually going towards the upside as far as I'm looking at right now. Now, do you remain kind of overall bullish on the stock market going forward? What kind of macroeconomic factors do you think will be able to support that growth going forward? Or do you think at some point we are due to have a significant pullback?
What do you think, Jared?
It's always a good question, but I think that every bear market, which we had in plenitude in 2022, is followed up with years of talking heads and this is our bear market rally. Things go lower from here, and the more I hear that, the more confidence it gives me that we have potentially a pretty long-term bullish market in front of us. I think there's a good opportunity in the stock market. I think, you know, I'm of the opinion that some of the bigger stocks that have made their bigger moves will have very slow sideways grinds higher. I don't see any super great opportunities for myself in some of the big leaders, I guess, right now. I think we have great opportunity in some of the, you know, smaller stocks that provide things that we actually need on a day-to-day basis. Energy stocks, material stocks, retail, cyclical stocks. I think some of those boring ones are going to be the sneakers that people don't notice in the background, that just steadily go higher and give us, you know, long-term runs from here. So I'm very much not, you know, bearish on the market as a whole. I think there's some upside potential for sure, but I think it's also going to be a bit of a disjointed market, right? The S&P doesn't have to go higher, and it may not. It may just grind sideways and slowly higher. But I think there's going to be sectors within the stock market that have really good major runs, and that's kind of where my energy is focused. I think a lot of those real boring stocks, some of those material, those guys that make steel, right? That we don't think we need, except for it's in everything that we, you know, consume and use on a daily basis. Copper, I think those are going to be the ones that kind of take off and run, that nobody's paying any attention to.
It's true. And just to that point, I mean, if we have something as simple as sector rotation, I mean, right now, energy, utilities are the worst performing sectors year to date. So call it a reversion to the mean, call it a pullback in tech, but an advance in something else to catch up. I mean, energy, utilities, materials, that'd be the catch up play for value. And I know we're positioned for that. So, I mean, I think we have some fantastic price cycles ahead. And, you know, it'd be interesting to see if it's just a broad market. You know, as Jared said, maybe the SPY is a slow grind. Maybe the big tech is a slow grind. But as a broad market, maybe it still goes higher. You know, and so I'm not surprised that, you know, we're sitting here talking tonight and tomorrow is the Fed in the afternoon. They're going to raise rates. And then we have probably a 6 to 8 month pause until maybe March of 2024. The market has been so desperately waiting for the pause cycle that you can see that it clearly priced it in way ahead of time. And that's what the market ultimately ends up being, is it's a forward-thinking mechanism. So call it the Fed pause, call it the AI hype, call it whatever else. It's like, I think there's going to be enough excuses or catalysts in the market to have a commentary that will continue to drive it higher. And like we talked about earlier, I don't know if we said this in this session or not, but the most painful trade this year has been people that have been fleeing to safety and didn't want to invest in the market in 2023 because they thought it was going to be a permanent bear market. But instead, now they're looking at stocks that are up, you know, hundreds of percent year to date, and, you know, ETFs that are up 40% and 20% respectively and making new highs. And within a whisper of those all-time highs, and I mean, I don't want to short it at the all-time highs. I think if anything, we have a disruption and we have a volatility dip. I'm excited to buy the dip. I think right now that big breakout in the SPY above 420 is how we get to 500, you know? So, I mean, that's still $50 higher. So $50 a share is pretty good. That's a pretty good movement percentage wise. And, you know, we can do a lot with that.
Yeah. That's very good advice. I think a lot of people, when a lot of people are fearful, this is the Warren Buffett saying, you know, when people are fearful, what is it?
Be greedy.
Probably you guys probably know.
Yeah,
be greedy when
when
people are fearful, and
yeah.
be fearful when people are greedy. I think that's a very important point, because there has definitely been a lot of fear, particularly early on. Well, at least in the crypto market, I think as well, because of, you know, the macroeconomic environment. There's a lot of fear in general going on right now.
Mm-hmm.
But the guys who kind of went against the tide, how I think a lot of it is about kind of swimming against the tide and looking at what the masses are thinking, and then almost just doing the opposite. How much weight do you think that holds?
We're huge fans of not following the map. So that's kind of one of our trading tenets is if a stock we're trading is in the headline, it's not a stock we want to be in.
Yeah.
Yep. And the big swing in sentiment too. I mean, last year there were so many times where we saw extremes in bearish sentiment that remained. And even one of the big like Wall Street analyst reports was talking about a down year for the entire stock market this year. Every 4.5 years, I think, is when you get a correction in the market on average. So, I mean, it made sense, but we had a correction in 2020. So for them to call, I mean, just against sheer probability, it's like to say that the entire market's going to be down. I mean, they were wrong. And in fact, to pair that with, like Jared said, talking heads that are extremely bearish and, you know, all these terrible things are coming. It's like, believe me, we've talked to investors that have the same fears because of the TV that they watch and the news outlets that they follow. And we're just like, look, this is why we trade. You know, you just we'll send you statements every month and you just let us do our job. So, awesome. But yeah, it's right. It's amazing how at the end of the day, people get so scared on a correction when real investors are just buying things on sale. Why doesn't everybody just look at it that way? Instead, it's like the market's down and it's just this downpour of terrible pessimism, but things we like are on sale. I mean, in 2020, Jared and I both looked like the market. We had 10 to 20 year discounts in a month. Why would you not buy it? You know, 2022, there were things that were beat down 70, 80, 90%. Why would you not buy it? So it's
very much
now it's like there's companies that still have a long ways to go and a long ways to catch up. So why would you not buy it?
So as we move into our last few minutes, I just want to ask you both a closing question. So Jared, outside of kind of the world of stocks, we're seeing AI really taking hold. What can the average person do to prepare for the future, given where we think and where we've discussed already where AI might be taking us?
The average person, you know, I think the best thing that anybody can do in kind of the AI space is just get familiar with it, start using it. You know, I think that's the best thing you can do is just at least know. I mean, there's always going to be those out there that resist and that don't want to change and they don't want to jump on board with a new trend or something that is unfamiliar. I would just say get familiar with it, get real familiar with everything so that whatever changes are coming, you can easily redirect whatever your career path is in that direction. And so, yeah, don't be foreign to it. If you haven't opened up a Chat GPT or a Google Bard or whatever, do it. Watch a couple of YouTube videos on it. Get familiar with how it works and how it functions, and start to notice if you get really fancy emails from your friend that you know can't hardly read, and say, okay, I'm picking up something here. You know, just familiarize yourself. I think that's the best thing anybody can do right now.
Okay, cool. And Chris, any particular narratives that you think the viewers at home should be focusing on? Any particular IPOs that you've got on your radar, or any kind of if it was day one trading AI stocks, where would you be looking right now?
Honestly, not AI. I mean, seriously, I mean, it's so mainstream. It's so mainstream that it's not something I want to chase. I feel like that would be the shiny object right now. So
okay, so what's the dull object? What's the diamond in the rough?
I think it's the boring stuff that Jared was saying. I think it's gonna be copper, it's gonna be steel, it's gonna be aluminum, it's gonna be materials, it's gonna be, if we go into look, if we're gonna try to have some type of expansion globally, if we're gonna start, whether it's materials being hoarded nationalistically or it's something that is like for the greater good, I mean, things have to get built. I mean, notice how we're talking AI, we're not talking recession. That was the one thing that was the big trigger word last year, is like recession. We have the deepest inverted yield curve that I've ever seen in the last 40 years. We haven't had a recession. We keep saying we're not going to have a recession. It's a soft landing, So I just think that if you're chasing AI, it's like the move's already happened, and there might be some upside to it. But to me, that's the Warren Buffett cigar butt that may have like the last little puff in it, but that's not where the next big move is. I think the next big move is things that still have technical price cycles to run and still have just great valuations, and they have a long runway of profits ahead. So
awesome.
Yeah.
Cool. Okay, well, that wraps things up. Thank you very much, guys. Some really insightful and interesting information, which I think is going to be really valuable to the guys at home. Seems like the main takeaway is the AI bubble maybe is kind of nearing its top. Who knows? But it's a dangerous place to be getting into. Pay attention to kind of the less exciting areas of the market, and that's where we're going to see potential for the most growth. So always be paying attention to trends. There's lots of tools out there. Up your game when it comes to AI and use of tools like ChatGPT, and prepare yourself for the future. Thank you very much to both Chris and Jared from Union Capital Partners. Guys, have you got anything else you'd like to say, or just sign off there?
Thanks for having us on. That was a great discussion.
Yeah, Peter, that was great.
Welcome.
Thank you. Thanks, Trading Battle, 8cap. Awesome stuff.
Thank you, guys. Cheers. Bye-bye.